Now, how to look at the investment activity of the cash flow? So already we have discussed on operating activity of the cash flow. Now we are saying how to discuss on investment activity. So this activity looks after what kind of investment you have done on mutual fund or FD or purchasing of the fixed asset, this and that. So obviously when you are purchasing and making investment, there may be some inflow and outflow of the cash. So when I am going to prepare this activity, there are two data source. One is P&L and second is balance sheet. So out of balance sheet, what is the component I am supposed to take for this activity? So that is called non-current asset. You have already utilized the current asset and current liability in operating activity. Now you are utilizing the non-current asset in the investment activity. So when you are going to look at the non-current asset, typically all land building machinery and interest received, dividend received, kind of items they are going to be considered. So when I am going to classify them, so if I am saying P&L is the data source, so what are the items they will be impacting this activity? So again, depreciation, amortization, interest received and dividend received. So they are the items sitting in the P&L account. They will have impact on this activity. When I look at what are the items they are sitting in the non-current asset section, because balance sheet is also a kind of data source for this activity. So any possible non-current asset will be considered, which is called fixed asset, either tangible or intangible. They will be considered in this particular activity as per the increase or decrease of the cash. So what is the third data source? I will be using table number B, which I prepared for all non-current asset related account, where one T account is given. Opening will be left side, closing will be right side. And in the right side, I will also add back my depreciation or amortization. It depends on the name of the account. So when I am writing the account or table B related to machinery, plant, building, then I am adding back that appreciation. If I am writing the table B related to goodwill or all or any other intangible, then I will be adding back the amortization. So again, depend on the total of plus and minus. If plus is higher than minus, then I will be saying positive cash flow. If minus is greater than plus, then I will be saying the negative cash flow. So this will be helping me, table number B will be helping me to take my right decision in terms of how much I should be writing in the section of investment activity as a positive cash flow or negative cash flow. So, so non-current asset related comparison will be justified through the table number B. Remaining two items like interest received and dividend received, if they are given in the P&L account in the category of other income, they will be also reported in this activity, right? I will be taking the total and total will be positive or negative. So expectation in terms of analysis from this activity is like if I am saying this activity is coming negative, that is a kind of good sign for the company. That means company is rotating the capital, making capital expenditure, trying to expand the business, and that is why this activity is coming negative. Companies keep reporting positive number in terms of this activity, saying that investment activity cash inflow, right? Total is coming positive, then this is a kind of negative sign more or less for the company because that means company is not growing company, not making capital expenditure. Why? Because mathematically, if I compare interest and dividend received, they are the very small amount. So you made some investment this year, you are maturing your return on investment. But if you compare this two items with the capital expenditure you have done for this year or last year for your company, so obviously that capital expenditure is in terms of number they are higher than the interest received and dividend received. So how would I look at the cascading effect? Expected cascading effect is always negative. So that is the reason this activity is appreciated if negative amount is going to become. It is not supposed to be treated as a negative performance of the company, but this is a kind of good sign for the company because they are making the capital expenditure or you in other way other language of finance you are saying this is justifying the rotation factor of the company. We discussed what is rotation factor. Company, they are not supposed to keep idle their capital, but they should rotate the capital for possible profits and all. Thank you.